This is THV 11 This Morning.
Well, when you finally decide to buy a home, one of the first things you need to do is obtain a mortgage. Unless you're just cash rich and you just pay for it right there, right? Yeah. All right, but how do you get started? We've got Scott McElmurry with Little Rock Mortgage here with some tips. And Scott, good morning. Good to see you.
Morning. Thanks for having me.
All right, so where do we begin? Buying a home, do we want the fixed rate, the adjustable rate? What do we want here?
Well, those are basically the two general options. Fixed rate being the less risky, certainly with rates where they are now. It's probably the wise choice. An adjustable rate, you really want to mirror the time that it adjusts or the time that it's fixed before it adjusts to the time you're going to be in the house, because you really don't want those fluctuating payments.
Do you see more fixed rate mortgages than adjustable
Absolutely,
rate?
Especially at low rates.
Yeah, so if you're going to be in a house for only a couple of 3 years, maybe an adjustable
maybe,
rate mortgage
if it's 2 or 3 years, you might get the 5-year adjustable rate where it's fixed for 5 years, and then you might get a little bit lower rate for that.
Okay, a lot of people buying a home for the first time might have to have that private mortage insurance, the
right.
PMI.
Yeah, if you don't have 20% down, that's going to be a requirement, and it's kind of a worthless payment to you, and it's to insure the lender in the event of default. So if you can avoid it,
right.
you want to, and there's ways to do that if you have less than 20% down.
Yeah, but if you want to buy a house, don't let that stop you. If you want to be
absolutely
a homeowner,
not.
you plan
Sure.
on staying in a certain
and it's not a large payment, a portion of the payment, but it is something, again, that you want to try and avoid if you can. And there's a couple of ways to do that. There's one option called the piggyback option, which would be you finance 80% on a first mortgage, which avoids the private mortgage insurance, but then you get an additional loan, a second mortgage, that covers the difference between 80% and what your down payment is. Those are a little bit harder to get. Interest rate on the second's a little bit higher, but typically the combined payment of the first and second is still less than what you'll pay with mortgage insurance.
Okay.
The second option is actually what's called lender-paid mortgage insurance, and that's where a lender will increase your rate slightly and actually pay that mortgage insurance for you. The drawback is once you get to 78%, the mortgage insurance falls off. If you have a lender-paid mortgage insurance, you'll have that higher rate for the duration of the loan.
It's a lot of stuff to consider there.
It is, and that's one of the things you want to sit down and really discuss all the different options, including all the different loan programs. Because if you're a veteran, guess what? There's a loan for you, and there's a zero down payment, and there's no mortgage insurance on that one. So
it makes you want to go out and be a veteran.
That's right.
What about rates in general? Have we seen them kind of level off, or if they've been slowly going back up? Is it still a good time to buy?
It's an excellent time to buy. Actually, we have seen rates decline and level off at that lower rate. Now, we're not seeing a large increase. Certainly, we project at some point within the next year and a half that we're going to start seeing them go up. But right now is a fabulous time.
And if they do go up, do you see people holding back on not getting mortgages and maybe doing more renting?
Well, there's a certain level that rates will have to get to before I think that happens. We're certainly not there right now.
Okay. Scott McElmurry joining us. Thank you so much.
Thanks, Tom.
So things to remember. Still a good time to get a mortgage, folks. You can find a house.